Hello, good morning. Today is the last day of the week. It is Friday. It is Friday. Welcome everyone to the Daily Plan, the daily stream for some trading here on Plan the Profit. I'm your host, Joe Boss, and I'll be your boss for the day. Nice to see you in the chat, Brinsley. So, things are moving pretty darn smoothly, at least for me. We got some dollar strength here. Bitcoin's been holding up its range. The S&P keeps grinding on higher. And oil has been holding its gain over the last 2 days here. Going into today, I started the stream a little late. Usually I start around 4:30. But today I started at 5. And that's because, well, nothing really else is happening here today other than this data that is coming up here. If I could go ahead and switch on over to the screen. And you can see the assets that I was talking about here, right? Dollar is going up, and away. Same thing. Actually, that's Bitcoin. Bitcoin's grinding higher. You got the ES grinding higher. Although, you can now see the range that I'm talking about with Bitcoin effectively going sideways. Bitcoin's in this 30K to 31K range. Yeah, we do have some CAD news. We have Canadian GDP. So, we'll take a look at the Canadian dollar FX pair. But we got most of what's going to happen today is all US stuff. It's just US PCE, US core PCE, personal spending. This is going to be a very big factor on consumer. If the consumer in the United States is slowing down into summer, it means there's going to be probably less tourism. That's not great. You got Chicago PMI. You got a few things coming out in the hours ahead, which I won't be covering here on the stream. Also we got the Bank of Canada business outlook. That's going to really move the Canadian dollar. So if you want to trade these other macroeconomic and sentiment indicators that are going to be coming out later today with me, you can join the Plan to Profit Discord. I'll be in the trading room voice chat. I'm in there right now. I'm just muted and deafened. Come hang out in there with me. Just had 5 guys in there this morning around for the last hour or so, just all talking about different trades and stuff, how the last week has gone, how the last few days have gone. Been really liking how everyone's been just chatting up, saying hi to me, hi to everyone else. Been a good time. It's been fun hanging out in the Discord. Why don't we get right on into some of this stuff? So again, this US macro data probably going to ruin some people's day. That the dollar could definitely continue. The baseline expectation, the consensus view, is that this data is going to come out pretty good for the United States, and that it's going to make the DXY go higher. It'll probably make the stock market go higher because it's relative US strength compared to everything else. Oil's probably not going to react too hard on it. It'll probably go down, if anything. I'm expecting that it'll just go sideways into the end of the week. And Bitcoin, hey, Bitcoin's pumping right now. It's up $160 at the moment, about 0.5% just in the last hour since we started. In the meantime, let's look at the CAD. So right off the bat, Canada has had a fantastic bounce. I think if I turn on the drawings, we have some drawings right around here calling the low. Yeah. And then we got this whole mess over here from FOMC. Jeez. Yeah, we hit the target at this point, but wrong time. But yeah, that was the expectation going up. But now, again, if this US data comes out moderately well, it's going to send this thing higher. Don't get me wrong, the Canadian macro data will probably take control and move this thing lower for some time, but net, I think just the sheer amount and the sheer strength of the US macro data, it's going to overwhelm a lot of these other FX pairs. Man, it's going to overwhelm a lot of them. Tidbit out of my research note. So for everyone who's in my trade group, I write up my own outlook. So I constantly talk about make sure you read outlooks from all these different trading institutions to learn about what the consensus future expectations are for the assets that you're trading. And then as you read those outlooks, you're going to learn a lot of the economics going on. You're going to learn a lot of how markets work. Now, I write up my own outlook for people in the trade group, and I summarize other people's outlooks. And one of the things that is now starting to become a more consensus view that I've been talking about over the last couple of streams here, if you watch me, maybe you can point out, like, yeah, Joe, you've been mentioning this, is that I think the ECB is going to be making a policy error right now. They probably should have either paused at the last meeting, or they should have hiked and said, that's it. Because now Europe is slowing down so significantly, and it's about to get a hell of a lot worse. The French economy is just tearing down the economic aggregate prints. It's just been slowing down so harshly, and it's only going to get worse now that those riots have begun. So the French are creating the fall down of the economic data in the euro area at the moment. Not fantastic. And so there are negative economic surprises in the euro area. Not good for the euro currency, and not necessarily great for the ECB, because it could mean that they're going to have to get more dovish. They're going to have to probably have dovish surprises. And I just got a outlook sent to me, I think by Nordea, and they talked about how the economic surprise index for the euro area was actually negative. I mean, we can pull up euro dollar in this top left chart here, and you can see it's just been going down, 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 down since around here. Right around here, if I could enlarge this chart, right around here is ECB. So this was the ECB pump. And all throughout this period, all throughout here, I've been not just shorting it myself, but I've been saying, hey, this doesn't make sense. All these people saying that Europe is going to have relatively stronger growth than the United States, when you have France, puking out a lung on its PMIs. I mean, that's what happened here. The PMI data came out for Europe, and it was total trash. And then more macroeconomic data started coming out, and the whole thing just kept getting worse and worse and worse. The macro picture just keeps getting worse for Europe, at least relative to the United States. And now you get all these riots going on in France. It's not going so hot, guys. It's not going so hot for Europe. I can't stress that enough. But now, at least when it comes down to the euro-dollar cross and any sort of US dollar cross pair, and this goes for crypto as well, by the way, because technically, I mean, here, look at Bitcoin. See how it goes Bitcoin USD? It's BTC USD, that's the ticker. Same thing with all these equities, and same thing with all these commodities and all the bonds. It's paired against a currency to do its pricing. So if there's a big move in the currency or in central bank expectations, you're probably going to end up moving those asset prices as well. And that's pretty robust. That's pretty nominal. Most guys get that. That's the case. Now, only in like the last 24 hours have I started to get some outlooks saying this next bit. But I've been saying this since the last FOMC meeting in June. Actually, the last FOMC meeting, if you don't remember, I was anticipating a hawkish surprise. I was expecting a 25 basis point rate hike. And that the simple answer to that of why I thought that is, hey, if the Fed is only going to hike once or twice more, why the hell would they pause and wait for the data? Why wouldn't they just do the hike and then announce that they're pausing and then have it done with? Why would they go through this extra rigmarole to pause and then hike again if they're anticipating the economy to slow in the future, but not right now? So why not do the hike now and then pause in the future so then you can accommodate for the weaker economic data in the future? Well, it turns out I wasn't the only one who thought that made sense. A lot of smart people also thought that the Fed was going to do this surprise 25 basis point hike last month. But they didn't do that. They didn't do the hike. However, their forward guidance was significantly more hawkish. They said, hey, we're going to probably do 50 more basis points of hikes, which is really not what most people were expecting. So now that we've had this outperformance of US data come out after this increase in forward guidance from the Fed, now markets are completely pricing in the probability of 50 basis points of rate hikes, or at least they're pricing in most of the 50 basis points. Real quick, I'm going to go to the CME tool and grab the odds. So CME Fed Watch tool. The next meeting is in 26 days. Yeah, they're saying there's like an 89% probability of a rate hike at the next meeting. And there's a 25% probability that we get another rate hike at the September meeting. So the odds of more rate hikes coming along here is going up. Last week, the probability of getting the 2 rate hikes, of getting the 50 basis points that the Fed is projecting, was only 10%, roughly. And now it's 25%. It's way, way up. So I have my guard up, because if the Fed comes out anytime over like the next week and a half with any sort of hawkish commentary, you're probably going to see more outlooks and more commentators say exactly this: that the Fed made a policy mistake not hiking at the last meeting, because now they got to freaking play catch up. And you know what? There was a guy, a very smart guy, who said this at the very beginning of June. And it was this guy who was on the FOMC committee. He was an ex-member of the FOMC, and actually a couple of ex-FOMC members who were giving analysis on the June meeting said, yeah, they should definitely do their hike. I don't know why the consensus is no hike. And then the forward guidance is not so with no hike. It's just, Fed's a mess. Fed's a mess. But now the flip side is there are people now saying, oh, the Fed has paused. They didn't do their hike in June. So now the Fed has paused. They're not going to hike in July. And we are at the Fed's terminal rate. So there are some traders out there who are forecasting and anticipating that the Fed is now done hiking, and that everything that everybody is projecting out into the future is just airy-fairy, probabilities that don't really matter. And that there's going to be effectively, those are guys who are thinking that growth and is going to take off around the world, that all of the recession odds, all these indicators that say we have a 70, an 80, a 90% of recession, depending on what indicator you look at and what outlook you read. That those high probability of recessions coming from all these different models are going to crash, 20, 30, 50 points on their probabilities. And the odds of recession are going to go down, and we're going to be back in this Goldilocks zone where everyone's got their job and inflation's going higher and growth is increasing. And, wouldn't I love to just, wave a wand and have that happen right away? It just doesn't seem like that's all too likely, considering the trend in growth is lower in most of the world. I mean, the people who were anticipating growth out of China to come are getting really disappointed because it doesn't look like the China stimulus is helping. I mean, the Aussies and the Kiwis aren't too happy about that. Xi Jinping actually just recently went to New Zealand. And I mean, just look at this. This hasn't really been particularly bullish, right? When the president, the ruler of China, Xi, goes to your country. Now, understand, I don't know if you guys know, but just a little background. New Zealand, the country off the coast of Australia, they export a lot to China. Their biggest export is dairy. It's dry powdered milk. They export so much of this stuff to China. China has to import a lot of their food, and they import quite a lot of food from New Zealand. And that's where New Zealand makes a lot of their money, through exports to China. And then they get a lot of money through like tourism with Australia and whatnot. Lord of the Rings, that sort of stuff. Everyone wants to go see all the Lord of the Rings sets there. Yeah, that kind of stuff. We got 10 minutes till the macro data starts to come out, and that's when we'll get a little bit more serious and, super focused on exactly what we should be trading. But yeah, going over some of these larger macro themes helps put into context the day-to-day activities and whether the thing that we're doing today, is it just noise? Are we reacting to noise, to random Brownian motion, as most quants would call it? Are we reacting to some, stochastic jump, right? Is the thing that we're looking at a random walk, or is it autocorrelated? Is there momentum, right? Is there some true signal behind the thing that's moving right now? And one way to put that into context is just to logically think about it with the model in your head. Oh man, freaking oil just got hammered here. Jeez. Any news come out just now on oil? The damn thing just took a beating here in the last 5 minutes. Here, I'm going to bring up financial juice. OPEC June oil output falls by 50K barrels per day from May. Yikes. And that came out roughly around here. That's when the news dropped. Yeah. Not good. Not good. Alrighty. I mean, again, another problem with the growth story. I mean, when you understand the macro side of things, and you understand, all these countries have slowing growth, inflation is still high, relatively, even though it's falling. There's all sorts of different models you can think of, right? And just to rip a few off, there's the growth inflation model. So you can find that little 2x2 matrix anywhere, growth inflation model. But then you can also just logically think about the story of what's going on. So remember what I talked about with New Zealand and China? Well, if we want to look at oil and think of some story, you could say, well, China uses a lot of oil to produce all of their goods that they export. And they're a huge net importer of oil. So it makes sense that if demand and growth in China is falling, that there would be less demand for new oil imports into China. Simply put, it's one of the primary assumptions that OPEC is working off of. When OPEC is cutting their production and doing all these dealings and trying to discuss, oh, how much oil should we cut? Whose oil should we cut? One of the people who they principally have in mind is China, one of the nations, right? Because a lot of their oil goes to China. Now, there has been a bit of contention in the oil market because of Russia. See, while oil prices have been suppressed, it doesn't help that in order for Russia to have enough funds to, maintain itself, it's been selling oil at a discount to China and to India as well. And that's cutting into the amount of money that OPEC can make. And then guess what? OPEC's getting screwed on top of that, not just from Russia trying to undercut them, because they're in desperate need of money and resources. So they're trading their oil at a discount for that. But also the United States is emptying its strategic petroleum reserve, the SPR, in order to keep oil prices artificially low. This is emptying all these extra barrels into the market. Yeah. All right. 5 more minutes till the macro data here for the United States comes out. Yeah. And one of the reasons why I think the United States is dumping on oil prices is not just so that then inflation around the world can materially go lower, but it's for 2 other purposes. One is to continue providing somewhat relatively cheap oil to China to help try and boost their growth. So the United States is actually kind of being friendly there and trying to keep oil prices down to help try and give China some boost by trying to lower the commodity prices for a core commodity they need to increase their growth, but also to kind of kick OPEC while they're down, because a lot of the members in OPEC over the last several years have not had the best relationship with the United States. Part of that reasoning is, well, the United States' fault, and also due to some combative deal making with China and Europe, and also the new aspirations of leaders that are coming into power in the Middle East and with OPEC. So the new leaders have their aspirations, they go their own way when it comes down to dealing with the United States. But the United States is now saying, hey, we can hit you back if you don't want to play ball with us. And the Middle East and OPEC, they're kind of losing control of the oil market. And you know what? They'll get kicked especially hard if there's any sort of recession over the next 2 months. They'll get kicked so damn hard. Because even though they're cutting their oil production like mad, they won't be able to cut fast enough when the demand plummets like a tank during a recession, if a recession actually does come. Because remember, there's still very high probabilities based off all these different models, based off everywhere, that a recession could occur. So it's just about being defensive on that front. Checking out the news every day, making sure to watch your macros. All right. 2 more minutes here. Remember to check your calendar and your clock and your economic calendar, because the stream is on a delay. when I get the data and I talk about it on stream will be later than when you see it. So if you are trading any of these, economic events for your own purposes, make sure you bring up the calendar now on your end, on your browser. And if you're trading along with me, go ahead, say hi, leave a money bag emoji. Nice to see you, Ricardo. Nice to see you, James. Princey, as always. And when you leave your money bag emote, leave a like. And if you're watching the recording, like, money bag in the comment, all that sort of good stuff. Alrighty. Getting comfy. 1 more minute till showtime. Hopefully you guys have enjoyed the commentary. I know a lot of people don't want to talk about those geopolitical issues with ECB, FOMC, and OPEC, but I find that those are pertinent for right now. And let's turn on Financial Juice.
Ten seconds.
All right, data's out. I'm seeing some dollar weakness right off the bat.
Still waiting. 3.8%, 3.8% as expected. Month over month, 0.1%, 0.1% as expected. Core PCE year over year at 4.6%,
Inflation is slowing down.
4.6%. Lower than forecast, 4.7%, with month over month at 0.3%, 0.3% as expected. Consumer spending month over month at 0.1%, 0.1%. Lower than forecast, 0.2%. US personal income month over month at 0.4%, 0.4%. That's higher than forecast, 0.3%, with real personal consumption month over month at 0%, 0%, lower than forecast, 0.1%. Canadian GDP month over month at 0%, 0%, that's lower than forecast, 0.2%. So looking to the markets here, to seeing some strength in the S&P 500, weakness in the dollar as well. A little bit of strength in WTI crude coming out from this as well. Let's look into the prior revisions now. PCE year over year, prior revised down to 4.3% from 4.4%.
Yeah.
There's also consumer spending prior revised down to 0.6% from 0.8%.
Okay, so these are relatively good inflation numbers for the United States. These are good inflation numbers. I'll be maintaining my dollar long.
So US Treasury yields falling here after that PCE data. So the 10-year yield down around 0.8 basis points on the day at around 3.846%.
Yeah, while the US dollar yields are down, so are the euros. The yield spreads are still widening in favor of the US dollar. So the yields on a relative basis are still stronger in favor of the United States. I would not be surprised to see this dollar weakness whipsaw back up. Now would be a good time to actually bring up the range probabilities. Let's get into it. Oh, check that out. We're at a likely low for the day.
I've posted out the US personal income.
So the low for the day is probably in on the DXY. I would say otherwise, you have a bearish threshold roughly around here. So until we cross here, I would not be too concerned about dollar falling any further on the day. So roughly call it 103.13. This might be a decent opportunity. Yeah. How about into the close for the day? Oh man, pretty flat odds here on where you'd end up. Yep. Let's see here. Aussie CAD. Let's check out the range probabilities. Well, James, you said that you got in. Man, oh man. Yeah, and now you're past the bullish threshold level. This thing is probably going to these very low probabilities. Trying to figure out where the top for this day is going to come in is going to be harder to predict. We have a lot more uncertainty because we have very small probabilities spread across a very wide price range from this point on. Either this thing's going to literally top out like right now, or it's about to go to like somewhere above 88.2, 0.882. Somewhere. I couldn't tell you where. Okie doke. Let's go ahead and check out the stock market. Uh-oh. We might be crossing this bearish threshold here on the DXY. That might not be so good. Yeah. I wonder. Yep, looks like it's going to cross it. In the meantime, until we get that alert, Bitcoin going up, and away. We're back at 31K here on the Bitcoin. Also, remember this assumption thing here? Hey, we actually broke it. Sweet. Let's check out the range probabilities. Yep, see you cross that threshold. Now you're just going nowhere land here. Our closing odds here, either this thing's going to pull back probably to 30.8K on the day, or probably going to close above 31K. If I had to make an estimate, I'd say that Bitcoin will close above 31K today. That's my baseline. And crude, yeah, crude is probably just going to drift a bit higher. Do something like that. Nothing crazy. But the ES keeps grinding higher. It keeps grinding higher. It's maintaining its current high. I wonder how it's taking the data. I wonder how the stock market's ingesting this data. I would assume that this data is bullish for the stock market. You took it off and made some breakfast money. Well, good on you. Congratulations, James, for the successfully done trade. Let's see here. New Zealand, not New Zealand, NASDAQ. NASDAQ had a more positive reaction than the S&P. Very, very good. It's probably topped out on the day unless you're able to get above, call it 15,210 on the NASDAQ. Quite a strong rally out of Euro equities, right? So the FTSE, the Euro stocks, the DAX, I believe that's the CAC. CAC 40. Wow, so some excellent moves here out of the French stock market on this day here. Let's see. What do I think about the idea or seasonality that markets always slow down in July? Oh, you mean like sell in May, go away, right? Well, it makes sense logically, right? The summer holiday, people go away. They don't trade. And you can just see every single year, yeah, around the summertime, less volume is traded in markets. There's less liquidity, and generally, because of that, there's less volatility. Now, don't get me wrong, there are still trading opportunities during the summer. Sometimes fantastic trading opportunities during the summer. It's just a different regime. That's all. Okay, so all of these indices. Oh wow, look at Aussie. Aussie's looking like it's back to these highs again. That's good. Good on the Aussie index. Because they got hit insanely hard the last few days. So you can see it's been consolidating here. Very, very, very good. How about New Zealand? Whoa! New Zealand. Congratulations. Jeez, this thing is just... New Zealand's been killing it. Killing it. Killing it. Wow, look at that. I bet everyone would call that a double bottom. And Japan? Japan had its pullback, and now it's probably on up to new all-time highs. Depends on how risk on we want things to get. If the Japanese yen continues to get weaker, it'll continue supporting the great run, the historic run we've had here on the Nikkei. We had a huge move in crypto today. The EDX group, partially owned by Ken Griffith and his crew, right? I believe at Citadel. They got a piece of this, I believe. It's Litecoin and Bitcoin Cash that have moved. Let's see here. Yeah. See? Bitcoin Cash has just been insane. 200% on Bitcoin Cash. Jeez. So yeah, on their prospectus for EDX, they've been buying... it's a speculation, right, that EDX has been buying Bitcoin Cash and Litecoin, and they'll be buying some Ethereum and some Bitcoin. And just because of the natural state of crypto having generally illiquid markets, at least more illiquid than traditional ones, that you're more prone to have these sort of jumps. So there you go. Oh, man. That looks so far so good. We're having a bit of a pullback here on the yen. Or rather, on the US dollar. So when you have these down moves, it could be the US dollar getting weaker or the Japanese yen getting stronger. In this case, it seems like it's the US dollar getting weaker. See, US dollar is in red right here. All of the other currency indices seem to be doing well. Looks like Euro is kind of holding in there. Euro is getting weaker and weaker still. This chart going up is weaker Euro. Yeah, and this chart going up here is weaker dollar. See? That's a very weak dollar. And then this is the yen. The yen is effectively going sideways. It's not really moving at all. So this dollar yen move is mostly the United States dollar getting weaker. What are my thoughts about pound dollar sells in July? Well, real quick, let me look at pound. As far as how July goes, it's really going to be dollar dependent. Because again, pound, the UK, doesn't have the best of the best macro outlook. And the yields in the United States are continuing to do generally all right. However, the Bank of England is continuing to tighten, so I would anticipate throughout most of July for the pound to actually appreciate against the US dollar, just simply due to the monetary tightening that's going on and the strengthening of the yields for the UK, from the gilts. I have a feeling that the pound yields, the gilt, right, these things here, the UK government bonds, that these are going to be some of the strongest yields going into the month ahead due to the tight monetary policy. So I have a pretty positive outlook on pound dollar. Because from the outlooks that I've read on future expectations for yields, it seems like the United States yields have topped out. Even though there's now 2 more rate hikes expected and getting priced in by the market, there's still people who are getting a little more aggressive, saying, yeah, this is probably the top. But then again, when I read those outlooks, we were kind of hanging out around here. So maybe something else is now going on over the last few days, because now people are starting to take, the Fed could actually do 50 basis points of hiking. And they probably did a policy mistake not hiking at the last meeting and giving such aggressive forward guidance that now may actually be met due to the United States economy growing at a relatively brisk pace still, and inflation targets not being hit. So, the United States economy is giving the Fed lots of room to continue its hiking potential. So, while US yields could go higher, it also means, the yields in the UK also got a pretty decent shot of going higher too. You just got to be careful. Forex is a relative game. FX is a relative game. So whenever you're looking at any 2 assets, you have to be very competent in the macro of those assets. And when I say the macro, I'm mostly talking about future trading expectations, right? So looking at yields, looking at spot prices, looking at commodities, looking at the macroeconomic data, and then seeing what the expectations are for that data in a month from now, in 2 weeks from now. And more importantly, why do people think those expectations? And then it goes down to this indicator and that indicator, or this macroeconomic data in that macroeconomic data, those forecast certain prices or certain aspects of an economy. And because of those forecasts, we have these expectations for the assets we're trading. And it's a skill to learn how to do that on your own. But what I say is, just read the guys who have already been doing it for 20, 30, 40 years that release free research and their opinions on a weekly basis with all that research done. You know, hop into the Plan the Profit Discord, check out the Outlooks channel. You know, there's all these disclaimers in every single one of those documents that it's not financial advice. It's literally just macroeconomic analysis and future trading expectations. But those are future trading expectations for some of the most powerful individuals, at least economically, in the developed Western world. So I think they're on the side list of people who are on the more important side to listen to. Should have bought Pound CAD on the news. Let's go ahead and check that one out. Ooh, yeah. Doesn't that one look good? Man, the 1 hour bars with yield spread looks really crystal clear on that. Like, there's your green, there's your red, there's your red, there's your green. Yeah, the yield spread indicator makes this super easy. Alrighty. I think this is going to be a pretty straightforward stream. We're about 47 minutes in. I'm pretty much ready to hop back into the Plan to Profit Discord, hop into the trading chat, and just chill. I'm going to go get a little bit more food, hang out in the Discord. If anyone wants to hang out with me, continue trading for the rest of the day into the rest of the macroeconomic data that we got. I mean, in all seriousness, there's some pretty big reports coming out here. A lot of important sentiment data out of the United States, and then the business outlook in Canada. So some pretty big stuff. So I'll see you guys in the Discord server of Plan the Profit. I've been your boss, Joe Boss. This has been the Daily Plan. And I believe I'll see you guys next Sunday. So give me 2 days here. I'll see you guys on Sunday for the next Daily Plan stream. It'll be a macro plan. And I'll be in the Discord. So hop on in if you want to chat. Continue trading the rest of the day with me.